Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at what happened in the market during the day and how we can plan for a better trade for the next day. So we had another down day on the Nifty and a green day on the Banknifty, right? That does not happen very often, right? But one index is performing, another one is not performing. So it was a momentum that is falling overall, right? But there is strength in the banks, as I said earlier, and we have a trend-dated weekly expiry tomorrow, right? Wednesday and Thursday and Friday. Thursday and Friday is a holiday, long weekend ahead, right? So let's get into and see the pre-market analysis, and it would be based on all the parameters that you see on the left side. And the right side, we'll have data analysis on those as well. And we'll wrap up with some actions. Without wasting time, let's get into the charts. So here we have a gap down on the Nifty. Nothing much happened on the Banknifty, except that it had a dip, but it recovered smartly, right? So there is a gap that is formed, which could act as resistance on the journey back on the upside for the Nifty. Right, so that's a hammer pattern. Hammer pattern is may not be relevant here because it's relevant if it is in a downtrend or in the top of a in a real downtrend or the end of a downtrend or not top of a rally. So this is none of those looks like, right? Neither anywhere down, we just retraced, nor are we on the top, right? So. But definitely the wick size of the hammer indicates there is bullish support from the downside, right? Recovery has happened basically. So what another look, at a different chart on Nifty and the Banknifty itself, you can see that Nifty has a previous swing high here near the 18, the all-time high is 18,400 nearby. We have the 18,350 is something that we have to look for, right? That is where it would make a new high, breaking the lower high pattern, right? Similarly, 39,000 nearby is also something that to watch on, because we have a swing high here, and it is mandatory that this does not form another swing high here and then fall back down here and then again make another swing. So that would be a bearish cycle that would be going to happen on the medium term, if you like. But right, that's something that you will watch out on the upside. But right now the question is, are we going to fall down back to where we came from, or are we are we consolidating, or are we moving up? At least are we consolidating? That it's not clear. But the strength of the Banknifty is very much clear. It's clearly above all the confluence of the moving averages, and the band, look at that, the upper band of the Bollinger is expanding, right? Clearly expanding, but the volatility would be there because the width of the band and the median is high. Same with Banknifty also. But you can see that there is a bend on the upper band that has happened. That means there is some consolidation, because Nifty needs some time to consolidate before it can move probably some more up. But Banknifty clearly is not showing that there is no consolidation here. It clearly says that it wants to move up. Right? That's what you see here. We had multiple 3-4 days of consolidation that happened on both indexes, and Nifty could not hold that level where it was consolidated the last 3-4 days. It fell back, but still it is at a good support level of a previous resistance, which is taken as support. Now it can still give another CIP bounce. One CIP bounce here happened, but it died down, and again it fall down. But at this point also this can happen. Right? Banknifty also same. This is also a previous resistance zone, right, from where it had broken out. So that resistance zone is now a support zone, and it has bounced up. So that bouncer can take it back to where it had made the previous swing high. So that so changeability possibility is still there. Look at intraday, what happened today. Right, it was a gap down, right, and then it made a V-shaped recovery, and then the last few minutes it gave up from some of it. Banknifty, it was a little different. It gapped down the same way as Nifty, retrieved everything, and then rallied up to close green. That's what happened. Again, last 3 candles, we have some profit booking in the 15 minutes time chart. You can see that's the price. Let's get to specific thing. So Nifty lost 145 points, Banknifty gained 134 points. Right, that's near 1% lost and 0.5% gained on the indices respectively. See, but you can see that the all the moving average supports are down there below. Fibonacci 61 levels is intact for Nifty. Nifty, although Fibonacci 61 was lost a few days back. and but it does not lost the gap support. Nifty had lost that gap support. There was a gap support here between these two green triangles. That's lost, right? That's covered, right? That's over. But Bank Nifty, look at this gap. So it is still playing around that gap. So that gap support is intact. But 61 retracement resistance levels, it's gone. But here Nifty still has that 61 and all the moving averages for both. And intraday price action, we have seen that it gapped down 0.5%, then lost, further gap down, further went down 1% on the Nifty, and then recovered, up to where the opening of the gap down was there. Right? So in Bank Nifty, also gapped down 1%, but a V-shaped recovery happened. But that V-shape did remarkable recovery of nearly 2%. So, and both indices changing varieties, possibly we have seen that. Bollinger Bands also we have seen that. Let's get ahead and see the support resistance levels. So the resistance 18,100. The immediate resistance here would be the prices here 17,500, 7,600, maintaining that Fibonacci level is what the main thing is. That resistance is broken, then 17,800, 850, then 7950, 18,000 rounding number back, and then 18,100, 18,200. If that will be the previous swing high, then above the 18,200 and 18,350, 400, that range. Resistance is down, if support is downside would be 17,350. If that 17,500, 600 is gone, means it will come to 17,350, 400 levels. Below that 200, 300 levels, and 17,000 rounding number, which is also a gap support level. Very good gap support from where it had made a rally last time. If that's also breached, then you come to 16,800, 16,900, which is Fibonacci 38. That's also a strong support, right? So that's the support and resistance on the Nifty and the Bank Nifty. On the Nifty, basically. Bank Nifty are to see, so we can see that it has supports at 37,000 levels. Below that 37,500 levels with a support, right? The gap support ends below that. So 37,000 also good supports to that. Below that you have Fibonacci 38, which near to 35,500. Then it's not clearly visible on the screenshot. Let me just directly go there instead of filling the long things, right? So that's it. Let's go to the daily charts and quickly see the levels, right? So supports 37,300, 37,500, Fibonacci 23, right? If that support is gone, then we fall back to 37,000 levels, and that fall back we come to 36,800, Fibonacci 38 levels, and if that is given up, then you come to 36,000 nearby levels. If that's gone, then Fibonacci 50, that is 35,000 and 35,300 levels. Similarly, the resistances on the upside would begin at 37,800, 700 at levels, then 38,000 would be the resistance. Then above that you have 38,500 levels, which is crucial to maintain that, and because that is where it reverted back last time. And then 39,000 above is also crucial, because it would mean that it would be taking out the previous swing high, right here on the top. So 39,500 and 18,350, two levels before we can say bullish. Probably it may hover around this 39,500 and this Fibonacci 38, and so all this, it may hover around this for weeks together. You never know that. But that's the levels, resistance support levels are there. Let's get back to the slides. Making note of these levels, right? Basically, in a nutshell, what you have to remember is we lost one of the gaps in the Nifty, right? Here we have not lost the gap in the gap, that's gap support that's there for the Bank Nifty, right? Keep a watch of that. Are we losing that or not? Here we have, if you're following, we still have support, very good support till 70,000 levels, right? And 17,200. That gap support, second one, is still there intact, right? But for Bank Nifty, this gap is crucial, because the next gap is very far down. Making out of those levels and coming to the moment, we can see that's Nifty has fallen back to the sideways zones now, right? Bank Nifty also has fallen back to the sideways on the short term, and medium term anyway, both indices that had been in the sideways momentum. So overall sideways, or we are back from the bullishness, right? Probably it may climb back, pretty soon, because Bank Nifty's momentum is not that down moving. It is like it is resisting just below the 9,000. It's not ready to fall down. So no divergence is seen otherwise. Trend, if you see, there was short-term changes happening in the Nifty. It is crossed out slightly, slightly it is crossed out with the resounds, but with a weak down moving trend, right? While Bank Nifty crossover has not happened, so Momentum is still the trend is still intact on the short term. Medium term, anyway, both indices have the trend that is in the bullish zone. So anyway, day by positive. So short term, there is small crossover shift in the momentum that has happened only in the Nifty. The Nifty trend is nothing has happened. So volatility, VIX was flat more or less, no 0.6% down. So 18.15 was very close to 20. Right. Implied volatility Nifty ahead of an expiry 16.7, and implied volatility percentage 58.4%. So substantial cool off has happened, but got to be cautious. That's because VIX is still closer to the 20 levels. Now tomorrow is an expiry, weekly expiry, triangulated VIX expiry. You can see the unwinding of the put portions that has happened here. Call portions also has happened far away. Okay. Banknifty also. Right. New put addition is in the Banknifty. A lot of put addition has happened. Unwinding also has happened, but no good put addition has happened. That means Banknifty is strong ahead of one day ahead of the expiry. Right, Nifty, a lot of resistance has added up here, so no, it would find it difficult. And the put unwinding also has happened a little bit. So resistance what got built up, put is got built up in the Banknifty. Resistance call is what is got built up in the Nifty. So that itself shows no the weakness of the strength and the strength in the Banknifty. The weakness of the strength in the Nifty and the strength in the Banknifty. That's very clear. And so here we have April 13th weekly expiry, tomorrow's levels 17,000 and 18,000. So writers and put writers and call writers are saying that it's a 1,000 point swing that can happen just in one day, and 17,500 and 17,600 is where the highest put and call right and second level, right? So it is. You can see that bearishness is 0.5. It's nowhere near to the bullishness in the Nifty, and it's a short bit amount of open interest futures that happened today. But look at Banknifty. The range is 37,000. 1,000 point is not much in Bank Index, and 37,500 and 39,000 the second level of put and highest call writings that is seen. And look at the put call ratio of the Banknifty, 1.03. That's clear bullishness, right? And a long build-up is what happened to the Banknifty. So Banknifty gives a lot of hopes for tomorrow. Look at the red. The ICICI Bank, Kotak Bank performed, and Axis Bank also performed. Otherwise, no performance from Reliance, no Infi and HDFC Twins also did not do. IT overall didn't do. Across the sectors, if you see, none of their sectors performed. Flat or down day, mostly. Index heavy is red day for HDFC. It did anyway slipped in the sideways, and after the big circuit breakout that happened. Same with HDFC also, momentum slipped in the sideways. Another red day, so seems like it is taking support. Momentum is sideways anyway. So Lions, another red day, did not perform today, and momentum slips on the bullish on the sideways. So now, and it may be consolidating. Infi, red day, something is wrong. Bearishness is where the momentum has slipped in the index as well as in the 8 pulse. TCS, sideways momentum is maintained, and the green day for some result related reasons probably then these are performing, but momentum is very much neutral sideways. ICICI Bank performing again, right? Today also is making a good bounce from the support zones, and the momentum is in the bullish zones. Trend is crossed over, volumes are good, patterns are good, long way to go before the next resistance. So that's the only stock that seems to be good. ICICI Bank. Kotak Mahindra, another heavyweight, seems to have closed green, but at the resistance points, right? And momentum is sideways but rising up, right? The support that is below is a very old one and very strong one. So it may be trying to head and take away the resistance that is there immediately above it. So I sideways wonderful Kotak Bank also. So sectoral performance, if you see IT closed red today. So the only sector that is bearish in the short term is now IT. 1.5% down today. And a bearish candle. Metal is also down. Right? It's only performing metal is the only performing sector in both medium term and short term. That has gone down and slipped on the short term to sideways, sadly. Right? The only sector is, but medium term remains bullish itself. No, we have to see whether that slip on the sideways will be made up, and then will it climb back to the bullish once again is what you have to watch. But till then, long bets has to be very carefully taken, very cautiously taken, basically. Auto is down, auto sector is down. It was sideways, maintained the sideways, 1%, nearly 1% down today. Pharma also red, 0.7% down today. momentum has slipped to the sideways. It was bullish, so short term momentum also is lost. So medium term anyway it is sideways, so just have to wait. FMCG closed down nearly 1%, 0.80% down, but the thing is that's the only sector that's bullish in the short term. Now, after the metal has gone sideways, FMCG is the only sector that is bullish on the short term now. Right? So reality also down, and the reality momentum also slipped sideways in the short term. Right? 2.7% down actually today, right? Reality. So medium term anyway it is sideways. So overall, the only sector that is bearish is IT, and the only sector that is bullish is FMCG on the short term. That's a picture of the sectorial performance, right? And none of the sectors are bullish on both the time frames, on higher and lower. So you just have to wait. No, the top-down approach of picking the sector and just picking the strongest in the sector, that won't work, at least for now, because the metal is only sector and it's gone down. So just wait patiently till it catches up. Institutional selling happened yesterday also. 3,000 crores of selling happened yesterday. Today also similar kind of selling might have happened. But Fyers also did not support too much. Only 870 crores of buying happened yesterday. Today's data is not coming. We'll just quickly check whether it is coming or not. No, not yet. So most likely it will be a institutional selling that continues. And look at the the dollar index. The dollar index is shooting up after having taken out a major resistance at the 99.6 kind of levels. Now it is above 100. So it's dollar is strengthening anything. And look at the USD INR currency pair. It is momentum rising, but it's now still sideways. But it's trying to move up after having fallen substantially for several weeks. It is bouncing up and moving back to the 76 kind of levels. Not good. But definitely there will be some intervention of central bank that will happen at the 76 above levels, right? Between 76 and 77, that levels. Central bank interventions would happen and price will fall down, but it's not good that the rupees continues to weaken and dollar is strengthening like anything, right? Look at the global indices. Dow Jones, it's a red day, bearish. Looks like it's not able to move up, and then shows shakiness, weakness, and looks like it is heading back to the place where it had broken out from, the major support zone. That's what the Nasdaq also indicating that an interim support that was there. It's also breached and it seems to be falling down. Another red. S&P 500 also has a red and mounted slipped to the sideways. So Nasdaq, the momentum is very closely supported in RSI 50. We'll have to watch whether it will take support there and then bounce back or breach down. Right? So overall, lost the momentum. A bearish day in the US market. So these figures may change tomorrow when do for the market, because this entire night today when the video is being made, that night full trading outcome will be available early tomorrow morning. So you have to watch that tomorrow also. But as of now, there is a weakness that's seen in the US markets. Crude oil has had cooled off below the 95 kind of levels, but today seems to be green and it seems to be heading back to the 98 kind of levels. But big cool off has happened to the crude. That's a good thing. Hope it remains below the 100 at least for some time. Gold seems to be breaking out, and after having taken a support at the same place where it had broken out a few weeks back and failed, but now it seems to be liking to go back there again. Momentum is rising, but still the sideways not in the bullish terms. Yeah. So two picks, and both of these are for swing trades for the next couple of days or tomorrow. So you don't know when the signal comes. Sometimes the signal also will not come. So it's not suggestible to jump in and take the trade. So the signal is not coming. You can see that there's a rounding pattern. It had a failed attempt, another failed attempt, third attempt. Now if you see that the candle is closing green above this resistance zone on the daily time frames, you can be sure that it's going to break out at least this size of this rounding pattern. So that will be big move. So but the thing is, the volumes are not that great, just at the moving and every average up. So yeah, to put tight stop loss at the neckline, right? You use small finance bank. Opera reality is trending up beautifully on the weekly charts. Entry estimate on the daily charts. Volumes are good. Trending is good and looks like it's trying to move further up the channel, but we have a resistance that was attempted 3-4 times now. And there's also a kind of rounding pattern on the weekly. So what you have to do is the entry would be only after you have a clear close of green above this resistance zone, right? And by that time the momentum would have gone to the bullish zones, right? So there is no clear signal readily available on both. Only if you get the confirmation on the end, the last candle high is crossed, at least the last candle's high is crossed, and also if you see stability in the price at least for a day, that's when you have to make the entry on the next day opening. Right? Try to stop loss at the neckline of the rounding on both the days, both the stocks. Right? That's where the stop loss will come in. Target can be twice the size of the surrounding pattern, twice the size. As much size can go up at least. Further projections can be done with Fibonacci trend extension tools. By drawing in from the last swing to the high and then to the last swing, recent swing. Right? Fibonacci extension can be used to get the levels where you have to target. Right? But yeah, at least twice of this is what we can look forward for. So target, stop loss, and entry signal details are given, but the trade is not ready. It is waiting for the signal, basically both AU small and frank or reality. Wrap up mild bearishness is what I feel, and neutral. There may be a big fight for the levels that may happen tomorrow. Volatility, and people don't want to carry forward the positions, even even for non-weekly, monthly expiries. Also, people may wind up the position. So, a lot of jittery movements can happen. So, this mild bearish or neutral combined. These views based on the chart patterns that we had looked at. The support resistance level and the falling momentum, the trend, crossovers, and the Bollinger Bands, expansion, contraction, all this that we had seen. Out of that, this is what I come out with. I have a mild bearish view. And we had a very good recovery. It's why it is mild is what I'm explaining. We had a very good recovery. 3-4 months we shot back 15% from the dip. Good supports are there. Everything is fine. Banking index is showing strength. But Fyers are selling. Crude is moving higher. Means crude is at a very high level. Dollar is rising like anything. Right? Uncertainties on global tapering news and inflation and war and all these uncertainties is still there. Nothing has died out. So overnight positions you have to be careful. Right? 17,500 maintaining that and then 37,500 maintaining that is very crucial. We had crossed that and then gone further above from there, but are we going to give it away again? Is the question that we have to look at. So welcome to the volatility for the truncated weeks. That was visible the last many days, and then tomorrow could be the closure of that. So as I said, the volatility is still there. Right, 20 plus moves can still be possible because it's 18 plus now. Fyers continued to sell yesterday also 3,000 crores. So all that things are there. Positive factor is that we are not going to make any crash. We may correct, we may continue to correct, we may further correct from here, but there are buyers out there to bring back the market in a matter of few days. Right? So volatility is cooled off. It's a good thing. Right? Overall, the positiveness of the recovery is still there. The only thing is, it's waiting for any positive trigger that can move it further up. Probably the earnings season could bring in that. Right? So on that positions, you have to be very cautious because all this one bad news can wipe out the entire capital if you're not hedged. Right? So take hedged positions like counter spreads or vertical spreads or non-directional strategies like IC, and condors and flies and all this. So that you can have what exactly you lose when you wake up, when you wake up from the sleep next day, right? Your capital will still be there so that you can plan better for the next trade, right? There's always the next trade. So keep your stop loss for the intraday also very much important because of the volatility. There is not a single day that is not having a V-shape move or an inverted V move, right? So that's a V move, for tomorrow. The mild bearishness with a sideways view is what I have. If that helps you to frame your view for the next day and helps you in your trade plan for the next day, consider hitting the like button and share it to maximum so that we increase our subscriptions, which is at very, very low level as of now. Thanks in advance. Thanks for putting your comments, feedback, how we can improve this, and all this would help us keep motivated for the next video. Thanks for watching. Happy trading, happy learning. Bye.